But you know what? If you go to minute 57 to 59 on the GTC Washington speech that Jensen Huang gave, which was little noticed, unfortunately, you'll see that the specs for the next generation, I think, are far superior to what Lisa Su has. But Lisa Su has product, and everyone needs product, and therefore I think that the stock should not have been down as much. I don't want it to be up right now, but it shouldn't be that bad. But you start thinking, well, wait a second, maybe this trade is over. I think it's on pause. I do not think it's over.
You think it's going to resume? All right. I mean, to be fair, of course, these are stocks that have run up enormously. I mean, in AMD's case, we've seen they sell 10% of the company to OpenAI, or at least they can. That is a possibility for OpenAI. And the stock went up. Well, look at that move. I mean, all of these. Palantir, of course, as well, Jim. I mean, it can just be a pause.
No one knew that she had the 450. No one knew that she had a product that benchmarks very close to what Jensen's doing. No one seems to know who's using what. I mean, the idea that Amazon suddenly had hundreds of thousands of NVIDIA that we didn't know about. The idea that Elon Musk, who's about to get that pay package, he's got more NVIDIA. And then the idea that you should sell NVIDIA. No, I'm not buying that. But AMD, there's room for everybody with AMD. Now,
yesterday, we led the show with this SEC filing from Michael Burry of The Big Short and how he may be betting against NVIDIA and Palantir. Again, we don't know. He was buying puts. That could be a hedge. We're not sure. But today, the Financial Times talked about Deutsche Bank having a potential or looking at the potentially shorting of some AI stocks. Is that impossible effectively right now? Would betting against these companies not only be foolhardy, but economically catastrophic because the cost of this?
Well, I think, as you also said earlier, there are now some other risks on the horizon, which, of course, is the IEEPA tariffs, which is both here in the short run, meaning including today, but, of course, in particular here over the next month or so. Though there's also the government shutdown. And the question is what these other risks do to valuations. And if we now on top of that have that we all agree that valuations for some of these companies in the Max 7, I mean, Tesla valuations at more than 300 on the trading PE ratio, it all tells you that there's just so much weight on a lot of these companies having in the overall basket. That means that it is not surprising that some people are beginning to look at this and say, is this the right risk reward that I'm taking relative to where this has been historically? And that doesn't mean that the risk cannot run on. And of course, we continue to see an expansion of the AI theme. But it does mean that as that process continues, it makes sense that some people are beginning to step back and think a little bit more about whether these valuations are not reaching very too high levels.
All right. So yesterday, folks, Palantir lurched into and actually led a mega cap graveyard spiral, right? They were like getting hammered. And it prompted many, of course, to start saying, well, this is the beginning of the end for these venerable names that have led us much higher. And this time the bears brought back some muscle. Michael Burry, the Big Short fame, he leaped in there. Of course, now I think he's become something of a modern day Captain Ahab. His Moby Dick predicting the next crash, right? He does this a lot, the next market top. However, I got to tell you, that call that he made that made him famous was a long time ago. The track record, I would say spotty at best. 2015 expected crash up 11%. 2017 predicted crash up 19%. ETF bubble up 15%. Market crash up 16%. He had a couple of successes, one being COVID, so everyone kind of checks that box. Now, to his credit, Burry does put his money where his mouth is and put, no pun intended with that word, $1 billion maybe against Palantir. My next guest, though, folks, isn't buying it, and he knows something about the options market. I'm going to bring in Market Rebellion co-founder John Najarian. John, to say you had an opinion on this would be a mild understatement. Folks, do you see this board here? What the hell?
Yeah.
What's going on? I mean, this kind of moved you a little bit.
It did. Because I do respect Dr. Burry, just like you do, Charles. Even though none of us are right all the time, I'll take the arrows when I deserve them, just like Dr. Burry does. But in this case, what he did was he bought a lot of puts. 50,000 puts in the case of Palantir. That controls 5 million shares. And he bought 10,000 puts in the case of NVIDIA. That controls 1 million shares. So both of those big put purchases are something that, people like me pay attention to. But these were declared in his Q3, which was back in September 30th. He didn't have to disclose this information until November 15th. So why would he go early, Charles? Because he's underwater on all the trades.
Right, he's getting hammered on these, and the clock is ticking. And I mean, you point this out, right? These are some big time numbers you're talking about here, and to get back to where he needs to be, I don't think he's there from yesterday's pullback.
No, and on the lows today for Palantir, for instance, it got to basically where it closed September 30th. So in other words, there's no way he's up money in that trade because you've also got time decay.
Right.
Theta always hurts the option buyer, and I'm frequently an option buyer. I know it very well, but that shrinkage, as George Costanza would say, is not good for the option buyer. You need movement, and that's why he came out with this decree early.
Well, and Alex Karp was pretty pissed off too. So hopefully we'll hear from him soon.
You know, it's so funny. A few weeks ago, I heard you voice some concern around the debt-ladenness of this AI boom, and a few weeks ago I disagreed with you. Actually, you look today and you see the story starting to change after earnings. Meta, for example, you had seen them being among the biggest drags on EPS in what's otherwise a very healthy environment for earnings growth for much of the S&P 500. When you look at Meta, a day later, they turned around and raised money in the debt market, which draws the question, are there other ways to access the AI theme without that stock market volatility at the valuations that we are at today? Now, one interesting statistic, you look through the end of the year, and the CapEx to free cash flow, the ratio is like 70%. We think that could grow to 75 to 80%. And you have others worrying whether you're going to start to see negative free cash flow for some of these firms. So we do think that how the CapEx boom is financed is going to be a big story going into 2026.
I mean, you mentioned NVIDIA. Is there any reason to believe that whatever happens in 2 weeks is going to somehow be construed as a negative? You hear from all the hyperscalers of what they're spending directly going into what NVIDIA is reporting. And as you said, Jensen Huang, we keep hearing from him talk about how positive their business continues to be. I mean, it'll be a market-moving event, I guess, because it always is. But is there any reason to think that it's going to be something negative?
That's not even where I'm really going with this. It's more that, will it be that catalyst that investors are looking for into year end? Like I said, we do still see upside from here, but will NVIDIA be that catalyst? I think one thing that's really interesting, Scott, is the composition of the Magnificent Seven. We would urge investors to look at how the individual components are performing. And the rotation you've actually seen in the last couple of weeks to some of the laggards now catching up, but some of the highest performers now falling behind because of how that CapEx story is changing.
Well, what about that one? Look, NVIDIA's looming a couple weeks from now. That's really the next big hurdle, I suppose, that this market has to get over.
It is. It definitely is in terms of kind of putting a bookend on the earnings story and seeing if anything can kind of top what we've already built up in the way of expectations into next year. I do think that their kind of investor day raised the sights. I think it really does also underwrote the whole AI sector. We're never going to really escape, I don't think, for however long this theme lasts, the questions and the debate about whether the valuations have overdone it, whether we're over extrapolating the strength of the AI infrastructure boom. But the numbers keep coming through. At this point, we're looking at like a 12% aggregated year-over-year growth rate for earnings for the third quarter. Obviously very strong, much stronger than expected. So even though stocks have not traded particularly well off of that, I think it does kind of go into the earnings phase into next year.
Yeah. Good day for semiconductors, though, during the regular session.
Well, until the last, I don't know what you want to call it, half an hour for NVIDIA, it sold off a few percent. It was interesting because the FT kind of, that's that newspaper that's
Financial Times.
Salmon, is that what you call it? Huh? The Salmon newspaper?
Yeah, Salmon.
They kind of bookended the day with some NVIDIA stuff or just really some AI stuff that started out this morning, an article talking about Chinese subsidies for energy and really trying to encourage their companies to kind of continue to move. And I really thought about it as like these are all incentives to kind of move away from NVIDIA and CUDA and really kind of innovate on their own. And then in the last, half an hour of the day, there was an article that came out from the FT where Jensen Huang is at a conference and he said the Chinese are going to win and we are being cynical and they are being optimistic. And again, he's speaking to an audience of one in that regard, but it was just kind of interesting that took the stock down at the end of the day.
Yeah.
when you look at them against NVIDIA, they pale drastically in comparison. But when you look at what they do have, 12,600 patents. They get royalties from 1,000 different device models. They have $8 billion in free cash flow. They're the leader in 5G. I say you buy weakness in the stock.
All right. What do you say? What does the chart say?
Partus.
Oh.
But I was more stuck on, is it salmon or is it coral?
I think coral's stronger. I think
Stronger.
salmon's
But either
later.
way, it's the only one that's got a color.
It's true.
Yeah.
It's true.
The only one.
My question is this. With so much of our economic growth and market value concentrated in these big AI and semiconductor stocks, are we essentially unhedged as an economy? What happens if adoption and monetization don't pan out? And are these stocks at this point just momentum plays since valuations have gotten so high?
Okay, well, let's take a look at that. I mean, if they're momentum plays, then why can Meta be at 26 times earnings? Why can Google be at 18 times earnings when we back out the cash? Why can NVIDIA turn out to be around probably 24 times earnings if you look at the future projections? These are stocks that are all below the market multiple. So I don't think that they're that expensive. Even Amazon's multiples come down a lot. And Apple, I think, is going to have a great quarter. So I think that their PE is probably going to be roughly just a little bit above the market multiple. All these companies are actually very big conglomerates. And I know we speak to GE, that's a broken up conglomerate, but I like the companies for what they have, which is different businesses that are firing on all cylinders. Do I think that the data center is a problem? I think that OpenAI has spent more money than it has. Until they started spending, I was not crazy. I really like the group. The OpenAI spend is a little too high. But in the end, these are the best companies in the world. They're nation states with good balance sheets. They're not momentum plays. And momentum plays are the companies that you see, I call them Sherwood Forest. The Robinhood plays that are over and over bought again. It's the quantum plays that are the problem. It's the nuclear plays that's the problem. It's the derivative data center plays that's the problem. That's where I worry about. That's what people aren't talking about. That and all the nonsense ETFs that have been put together to play momentum. That's what has to go away. I'd rather be on DraftKings and take a 14 parlay to see 5 tight ends that score touchdowns this weekend. Thank you.
My question is, what happens when quantum computing becomes real? What advice would you give to those currently investing in AI infrastructure for quantum computing?
Okay, first, I think there are only 2 quantums right now that are actually real. One is IBM, and the other is Google. There's a lot of others. We've had D-Wave on. I'm not saying that they're all joke. Like Rigetti is a joke, or as my friend Downtown Brown said, Rigetti is spaghetti. It's not like that. I do feel that what's happened is that there are a lot of speculative stocks about quantum that are 7, 8, 10 years away. IBM's got something that's going to work in the next year or two. It should impact all the power. That we don't need nearly as much power with quantum. But as Jensen Huang told me multiple times, he'll be in there too. You can't run the quantum without the GPUs. So you can run them side by side. IBM is the inexpensive way. They do have 8 machines that are currently working in quantum. That's the way to play it. Nothing else right now.
All right, I hope you're all doing great today. Overnight, it was reported that NVIDIA has joined a $2 billion India Deep Tech Alliance as a founding member to mentor and train emerging startups. NVIDIA will offer training and technical guidance to emerging startups in India through the NVIDIA Deep Learning Institute. According to CNBC, Jensen told them that the pace of innovation in India is accelerating and there could be a significant number of Indian deep tech companies of global repute in the next 5 years. This news is great for India, and it's great for NVIDIA as well. NVIDIA is constantly innovating and working to stay on the leading edge of technology, both from a technical and investment standpoint. And so this tech alliance will give NVIDIA an advantage in being able to notice promising tech startups early on. We are now 2 weeks away from NVIDIA earnings on November 19th. Based on NVIDIA's Q3 guidance, we should see accelerating revenue growth thanks in large part to the swift production ramp of Blackwell Ultra. I also expect Jensen to talk more about agentic AI on the earnings call, given his recent commentary about agentic AI, both on NVIDIA's last earnings call and at GTC. Jensen said back in August that he expects agentic AI to be a major growth driver in 2026. As I've been saying for months, I think we're going to see a surge in compute demand fueled by agentic AI that extends well into 2026. I think this surge in demand will be similar to the surge in demand we saw following the introduction of advanced reasoning models and inference. Looking beyond agentic AI, I think the next major surge in compute demand will likely be fueled by physical AI, and I'll talk more about that in a moment. Really quick, I want to address both Iron and MP Materials because both companies report earnings this Thursday after market close. I continue to be bullish on MP over the coming years, and I continue to be bullish on Iron for at least the next 1 to 2 years. I do not know how these stocks will react to earnings in the short term, but I'm viewing both of these as long-term investments. And short-term fluctuations in a company's stock price does not change the long-term fundamental trajectory of the company. As for Iron, I'll be paying close attention to updates from Iron on their transition to AI cloud. The reality is that for the next couple years, Iron will most likely sell whatever capacity they can produce as the world is severely compute constrained and constrained on power in the face of extremely strong AI demand. Iron should have the compute as they are now an NVIDIA preferred partner, and Iron also has roughly 3 gigawatts of secure renewable power. One thing that is unique about Iron compared to some of the other neoclouds is that Iron is vertically integrated. They are not simply a middleman between the owners of the data centers and the end customers. Instead, Iron owns the land, the data centers, the grid connections, the cooling, and so forth, and they service the data centers themselves. This leads to a much better customer experience. Iron already has 160 megawatts of active data center capacity in British Columbia, where they are actively transitioning from Bitcoin mining to AI cloud. And Iron is building out even more capacity in Texas, both at their Childress and Sweetwater locations. The $9.7 billion deal Iron announced with Microsoft is for 200 megawatts of IT load, so roughly 10% of Iron's overall footprint. If we add in the power for infrastructure and also add in the 50 megawatts of AI cloud from Iron's Prince George site in British Columbia, that brings Iron up to 350 megawatts and their AI cloud annual revenue run rate up to $2.5 billion. This is just the beginning. Iron has secured roughly 3 gigawatts of power, and they have a lot of room for expansion in the coming years. I continue to be bullish on Iron for at least the next 1 to 2 years, regardless of how the stock trades in the short term. I'm also still bullish on MP Materials, and they also report earnings this Thursday. MP will be reporting results for Q3. In the current quarter, Q4, is the first quarter in which the price floor commitment is active. With this in mind, a key point of focus on MP's earnings call will be next quarter NdPr production guidance. Another key point of focus will be whether or not MP is still on track to begin magnet production at their Independence facility by the end of this year, as they previously guided. In recent weeks, MP stock has been used by the market as a vehicle to trade off of US-China trade headlines. Rising trade tensions caused MP stock to move notably higher, and cooling trade tensions has caused MP stock to move notably lower. I think these short-term moves in the stock are irrational and overreactions to trade headlines. Please hear me well. Short-term fluctuations in the stock price do not change the long-term fundamental trajectory of the company. I continue to be bullish on MP over the next 5 to 10 years, and the moment to really look forward to is late 2028 when MP's 10X facility is expected to begin commissioning. At that point, MP will have unlimited demand for their product, and whatever they produce, they will sell. And the magnets that MP Materials sells will be crucial to the oncoming wave of physical AI. Speaking of physical AI, this is one of the big reasons I think most analysts' long-term NVIDIA estimates continue to be too low given what's ahead. Physical AI is going to fundamentally change society, and NVIDIA stands to benefit massively. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform approach to physical AI and embedding themselves as the indispensable foundation supporting all of it. Right now, most analysts are hyper-focused on NVIDIA's data center business, and I don't think the future growth of NVIDIA's physical AI business is being adequately factored into most analysts' long-term estimates. I am completely serious and not exaggerating whatsoever when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. I'm sorry if I sound like a broken record mentioning physical AI so much in these videos, but that's why I'm doing it. I don't think it's getting enough attention, and it's a big reason why I think most analysts' long-term NVIDIA estimates are too low. In addition to physical AI, NVIDIA has multiple other large long-term growth opportunities, including sovereign AI, enterprise AI, many AI-native startups, telecommunications, and 6G and quantum GPU supercomputing. Jensen believes that quantum computers will not replace classical systems, but that they will work together and complement each other. These additional opportunities in customer segments will increase the need for compute even further. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.